Hello, today I'm going to teach you my favorite chart pattern. This is called a 1, 2, 3 reversal. It's actually setting up right now on the QQQ, and I want to show you exactly what this pattern is, how you can trade it, and how you can take advantage of it and spot it so you're never caught by surprise. So the first thing is it's called a 1, 2, 3 reversal. So first thing you want to look for is a move to the upside like this, and so that's a 1, right? This big move here, and then 2, right, like that. Now, this is 2, and then right here is 3, and then this is the reversal down, so to speak. Now, the thing about this is that when this bounce happened right here, it was just a perfect trend and everything looked like it was normal, like it was going to come back up and make new highs, just like it had been doing, right? Any pullback, making new highs, everything was according to plan. And we got, like here, it pulled back, new high. So I was expecting a pullback and possibly a new high. But in this case, we have 1, 2, and instead of making that new high, it turned the corner on us. Okay, so that in itself does not mean that we're going down. But a couple other things that you want to notice. It's a 1, 2, 3 reversal, but it's also a head and shoulders pattern, right? Or some people call this the M pattern, right? It's an M. It's showing a mountain. We got 1, 2, 3 tops here. All right, so with that being said, now what do we look for? Well, you can see that the trend is starting to get weak, right? It still hasn't made a new low here, but what's really going to be important is to see how this level holds. We've got a 50 moving average. We have a support level right here around 557. And so we got the moving average, we've got the support at 557, and we also have this neckline right here. Okay, so the first thing we're going to see go is the neckline and the 50, and then when this comes down, we're going to see how this tests out, right? So it could easily settle down and then come back up. But if these levels don't hold, if the first one breaks, the second one breaks, and the third one breaks, then we could be looking for a reversal down here to the downside, possibly not quite as low as the 200 moving average, but you never know, because once a down move happens, you don't know how far it will go, right? Let's just take a look back at the last one we got. Right here, this one went all the way below the 200 and really retraced. And of course, I'm not saying that that's going to happen, but I'm just saying be aware of it. And so the way that I would trade this, as soon as we get a neckline break here and a close below on a daily, what I'm going to do at that point is I'm going to be looking at taking maybe a bear call spread, right? A bear call spread. And so let me show you what that would look like on the account here. Okay, so you go in and you would trade and hit the QQQ. All right, and I was just commenting, someone said that you're not able to trade options with less than $5,000. You have to, if that's the case, you have to apply for options trading, because I have my accounts now at 622, but it was when I first made my first deposit, it was just 100, and I was trading options all the way from the very first deposit. So you just have to apply for it. But anyhow, let's go ahead and we'll go out. If I make a trade, I like to do the 45-day expiration, which is 45 or more. So in this case would be October 17th, and we do a bear call spread. So one of the things we'd look for is if you think that it's going to go south, if we get a close below that area, you want to look at the delta, right? The delta is the price that the underlying stock moves, how much the option moves, okay? So in this case, I like a 30, which also gives you a probability of about 70% win rate. So I look for anything 30 and below because I want a very high probability trade. So in this case, I would be trading what they call a bear call spread. So we go here, I would choose the 590 because that is a very it's a very good probability. So we're going to go with the 590 and the 585 because the current price is 570. So anything that stays below 590, 595, and if we're headed south, we're looking at a very good trade. So in this case, we would sell it and you would get $1.86, $1.96, we'd go in the middle here, 196, 186, we'd get that, which is a really good trade. And so the cost of this trade, it's a $5 spread. So the cost of this trade would be $500, and you would earn $191 on a $500 investment. So that means the max you could lose would be 309. The max you could win is 190. And so the way that you would then trade this is you got 47 days, is I was immediately put a take profit on the trade, which means that I would put my close order when it hit a 50% take profit. So if I earned 180, I would just divide that in half and I would go for 90 cents, right? I would go for 90 cents when it hit 90 cents. And then that way, if we got another quick drop, I could get in and out of that trade very, very quickly, right? And so trades like that, high probability setups, most of the time, you would never, ever, ever catch me shorting this market. Every time that I would short this market, I would get destroyed, but I'm learning patience, I'm learning strategies, and I'm learning chart patterns. And if this pattern develops right here, if we get this break and this neckline, I will then sell that option up above here. All right, so that's a great pattern. It's the 1, 2, 3 reversal. It's also a head and shoulders pattern, but be on the lookout for that in the QQQ over the coming days. So I hope you liked that training and education on the chart pattern. If you're interested in learning how to replace your income with options each and every week with just 1 hour a week, check out my masterclass in the description below. We've helped a lot of people replace their income, and I have a goal of replacing the income of 100,000 individuals. And so might as well try it. The class is free. We'd love to see you. Thanks a lot.